Hello and welcome to VCC TV. We have with us today Aman Malik, Senior Assistant Editor, who will tell us about the RBI's credit policy review earlier in the day. Hello Aman.
Hi.
And thank you for joining.
Thanks.
So a majority had expected a status quo, but the Monetary Policy Committee sprang a surprise to all of us. And even you had said that, that you'll be surprised if there is a rate cut.
Yes.
So is it a good surprise or a bad surprise for us?
That's a subjective call, whether it's good or bad. But the larger issue is that they are essentially playing on commodity prices easing. Retail inflation has come down since August, and they expect that because of softening food prices, especially following a good monsoon and a record Kharif sowing, barring a few crops, food prices will come down even further. Agricultural prices largely will also come down even further. They expect prices to keep easing in the next two or 3 months, and that is why they've gone in for this. So, to answer your question specifically, people were 50-50 on whether there will be a rate cut or not.
Yeah.
I was obviously of the view that I don't think a rate cut will happen now, and they'll probably do it in December. But such is it. They have, at least to me, they have sort of sprung a bit of a surprise. But then if you look at the markets really, stock markets are not terribly hot on this. I mean, the Sensex is only up by about less than 100 points that I saw last. Which essentially means that the markets were probably looking for even more, maybe a 50 basis points cut. But that really hasn't happened. So all in all, it's okay, but it depends on how the price scenario actually pans out. So good or bad will essentially be determined maybe in the next couple of months or so.
Right. And do you think that the Monetary Policy Committee has remained true to its primary objective of maintaining price stability while keeping in mind the objective of growth?
Oh yes, of course, because you see, although the new RBI Governor Urjit Patel is a reticent man, he doesn't, like we discussed yesterday as well, he doesn't really often talk to the press, etc. But it was reported last month that he had spoken to a select group of economists whom he had told that the RBI will sort of adopt a dovish stand on inflation, quote unquote, and its policy will essentially be growth oriented. So to that extent, yes. I would also say that, growth in the sense that an average common man could get a little more money in his hand because his EMIs will go down. It would also mean, especially with the festive season coming up.
Yes.
So they are essentially timing it that way. But this is not to suggest that upside risks have gone. In fact, if you read the policy, the RBI itself says that upside risks continue. Not only do they continue, it's tilted in favor of upside risks, but the slant has kind of mitigated since June and August when the second and the third biannual policy reviews had happened. So they think that it's a good enough time to sort of cut interest rates, and that's why they've taken that decision.
And how do you read the guidance of the monetary policy in a committee? And could we expect another rate cut before the end of the fiscal?
I would again be skeptical of another rate cut, but then, like I said at the beginning, it depends on how the inflation scenario pans out. Mm-hmm. If the inflation scenario pans out as expected, then if they have sort of done it this time, why can't they do another 25 basis points in December? But that is one aspect. The other aspect will, of course, also be the fact that how the world economy itself sort of behaves. Because if you read the monetary policy review today, they have said that a lot of global factors are negatively impacting emerging markets like India. Now, if that continues to happen, there could be worries. Also, again, globally, and before I come back to other domestic things, globally, the US presidential election is coming up. That will determine a lot of things next month. As is the US Federal Reserve's policy review that comes up later this year, in which they sort of are likely to raise interest rates for the first time in several years. On the domestic front, like I said, upside risks do remain. You also have a lag effect, or rather an effect of the 7th Pay Commission and rising, an increase in minimum support price of crops, which essentially puts more money in the hands of people, which they will spend, like I said, in the festive season. That could be inflationary. Now, if that can be controlled, the inflationary impact of that can be controlled, why not? You can expect another 25 BPS rate cut. But if that goes out of hand, or if that sort of goes over the 5% CPI target for March 2017, we could have a problem on our hands.
After this review, do we know Urjit Patel a little better?
No, I don't really think. I mean, certainly not as well as people knew his predecessor Raghuram Rajan, who was more outspoken and, if you will, quote unquote, more media friendly. Even today, if you saw his press conference ended in a matter of 15 minutes. I mean, 3 o'clock sharp, he said thank you very much. His comments were fairly scripted. He did not speak out of turn. He's known not to speak out of turn. He's a textbook guy, if you will. That's the way he operates, and I think reticence will be the norm going forward. So to that extent, I really don't think he'll be an easy guy to read.
Thank you so much.
Thank you so much.